Hi, you're welcome to episode 9 of Make It Count Legal Accounting Made Easy with Benji. My name is Benjamin Ofeado. On our previous episode, we were able to look at the books of accounts, where we established the various source documents that will be recorded in the various books of prime entry and the various principal books of account into which they will be processed. And I hope that was clear. Also, we were able to establish the various classifications of books of account. On this episode, we are looking at the all-important topic known as the double entry system. The double entry system. And this is very important because when it comes to processing transactions into the principal books of accounts, this is the system that we use. So if you're ready, we are going into it straight away. What precipitated the concept or the system of double entry? Somewhere in the 15th century, a gentleman by name Luca Pacioli, an Italian, developed this system as a way of showing the various legs, that is, the two legs of every transaction. You would recall when we were looking at accounting concepts, we looked at the dual aspect concept. The dual aspect concept, where we were able to establish that for every transaction, there are two accounts that get to be impacted. And so when you look at the accounting equation, which is assets equal capital plus liability, for every transaction, we are either going to have both accounts be on one side of the equation or either accounts being on either sides of the equation. And so he developed this system, and subsequently it has been used, tested multiple times, and it has not failed. But what is the principal concept which really drives this double entry system? We've already spoken about the dual aspect, but what are the maxims that allow us to execute this double entry system? For every transaction, there is an account that gives and there's an account that receives. I say that again. For every transaction, there is an account that gives and there is an account that receives. So the double entry system stipulates that for every transaction, debit the account that receives and credit the account that gives. I'll take that again. It says debit the account that receives and credit the account that gives. Let me take you to familiar grounds so you may be able to remember this a lot more easily. You know, for most of you who are people of faith, you would have heard this admonition that there is more blessing in giving than in receiving. There's more blessing in giving than in receiving. So, if you are giving, you are being blessed, and so you get to be credited. But when you are receiving, you are not being as blessed, so you be debited. I hope that makes sense. So there's more blessing in what? Giving, so you get to be credited, than in receiving, so you get to be debited. So debit the one who is receiving, credit the one who is giving. Let's use an example to test that. So, in a transaction where the company purchases a motor vehicle for cash. The company purchases a motor vehicle for cash. What are the two accounts that are involved in this transaction? There is a motor vehicle account, which is an asset account. And there's also a cash account, which is also an asset account. But of these two accounts, which one is giving? and which one is receiving? Definitely, it is from the cash account that we are making the purchase. And we make the purchase into what? The motor vehicle account. So the motor vehicle account becomes the account that is what? Receiving. And so, with this knowledge, which account do we debit? Of course, the receiving account, which is what? The motor vehicle account. And then which account gets to be credited? Definitely the one who is giving, which is what? The cash account. Let's use another example. Think about this. Now, the shareholders give a capital contribution to the business in the form and pays it into the bank account. So the shareholders make capital contribution to the company into the company's bank account. What are the two accounts that are involved here? There is what? The shareholders account, which is the capital account, and the company's bank account. So capital account and bank account. Which account is giving? It is the capital account. Which account is receiving? The bank account. So which one do we debit? The receiving account, which is the bank account. And which one do we credit? The giving account, which is the shareholders account. That's capital account. I hope this is clear. Now let's look at one which has got to do with making a sale. Now, the business sells goods to a customer on credit. The company sells goods to a customer on credit. Which are the two accounts that are impacted here? The sales account, which is revenue, and what account? Because it's sold on credit, it is what? A debtor or receivable account. You get it? So they sold goods but on credit. So the company has now established a debtor or a receivable. So we have the sales or revenue account and the debtor or receivable account. Which of these two accounts is receiving? Of course, the debtor account is receiving the goods. Yes. And who is the one giving? It is the sales account. So which account are we debiting? The receiving account, which is what? The debtor or receivable account. And which account gets to do the giving? It is the sales or revenue account. And so we'll credit that. I hope this is clear. I hope this is clear. Good. So now with this understood, we are going to try our hands on a few more examples. But before that, I would want us to keep these maxims in mind when it comes to the double entry system. Of course, the mother maxim is what we have given to you, which is you debit the receiver, you credit the giver. And we said there's more blessings in giving, and so we get to be credited, than in receiving, and so we get to be debited. Good. Now, the next set of maxims. For an asset account, to increase the asset account, you debit it. For an asset account to increase it, you debit it. What that means is, for an asset account to decrease it, you credit it. For an asset account to decrease it, you credit it. So asset increase, debit. Asset decrease, credit. I hope you remember that. Good. So that is one. So you look at the accounting equation, asset is on the left. Now let's look on the right side. The right side, we have what? Capital and liability. Capital and liability. So in the case of the items on the right side, which is capital and liability, to increase them, you credit them. To increase them, you credit them. To decrease them, you debit them. That is the rule. That is the rule. Because, of course, if you are on one side of the equation and you are going a particular way, on the other side, it will be the inverse. And so that's how come we have it that way. So on the asset side, to increase, you debit, to decrease, you credit. On the other side, where you have capital and liability, to increase, you credit, to decrease, you debit. Now let's look at the items that you find in the statement of comprehensive income. Incomes and expenses. Let's start with expenses. Expenses operate like assets when it comes to how you treat them when it comes to double entry. To increase an expense, you debit it. To increase an expense, you debit it. To decrease an expense, you credit it. To decrease an expense, you credit it. And then on the other side, when it comes to incomes, incomes behave like capital and liability. To increase income, you credit it. To decrease income, you debit it. I hope that is clear. I hope this is clear. Good. So now let's look quickly at some 9 examples so we can master our knowledge when it comes to this. The first one is paid a creditor by check. Paid a creditor by check. What are the 2 accounts involved? Once you hear creditor, of course, there's a creditor account. And then by check, once you hear check, a check is a bill or an instrument used by the bank. So anytime you hear check, the account that is impacted is the bank account. All right? So the 2 accounts that will be involved in this transaction is the creditor account and the bank account. Good. So the company paid the creditor by check. Which account gives? Is it the creditor account or the bank account? So it is the company making the payment by check, which is from its bank account. So it is coming from the bank account. So the bank account is giving. And who is receiving? The one who is being paid, which is the creditor. So the creditor gets to receive. So we are going to be debiting the receiving account, and then we'll be crediting the giving account. Which account is receiving? The creditor account. So you debit the creditor account, and then you credit the giving account, which is what? The bank account. I hope this is clear. Good. Now, we paid the creditor by cash. Paid the creditor by cash. What are the 2 accounts involved? Once again, there's a creditor account and there's also what? Cash account. So this time it's not by check. If it's check, it would have been the bank account. But once we pay the creditor by cash, it is our cash account that has been impacted. So the source or the given account is the cash account, and the receiving account, which is the destination account, is the creditor account. So we are going to debit what? The receiving account, which is what? The creditor account, and we'll be crediting the given account, which is the cash account. I hope this is clear. Good. Now, a debtor pays the business by check. A debtor pays the business by check. What are the 2 accounts involved? Of course, there is the debtor account. And the debtor account, being a customer, paid the business by what? Check. What did we say about check? Once you hear check, we are talking about your bank account. So this time round, who is doing the paying or giving? It is the debtor account. And who is receiving? It is your bank account which is receiving the check. And so your debtor account is giving, whereas your bank account is receiving. And so which one do we debit? Your bank account, which is receiving. And which one do we credit? Of course, the one that is given, which is your debtor account. I hope this one too is clear. Good. Now, a debtor pays the business by cash. Clearly, there will be two accounts involved. What are they? There's obviously the debtor account and the cash account. And of these two, which one is giving? The debtor is making the payment. So the debtor is giving and the cash account is receiving the cash. So who do we debit? The receiving account, which is what? The cash account. And who gets to be credited? The account that is giving, which is the debtor account. So I hope we are clear with that. Good. Now, the company bought office furniture by check. They bought office furniture by check. Obviously, two accounts once again. There is the office furniture account, which was bought by what? Check. And again, once we say check, then we are talking about what? The bank account. So we bought office furniture by check. So we made the payment from the bank account. So the bank account is the giving account, and then the office furniture account is the receiving account. So which one are we debiting? The receiving account, which is the office furniture account, and then we'll credit the giving account, which is the bank account. Now, the company bought office machinery by cash. Two accounts involved. Office machinery, cash account. Who is giving? It is the cash account that is doing the payment, and as a result, the office machinery account is receiving the office machinery. I hope that is clear. Good. So the cash account is the giving account. The office machinery account is the receiving account. So we debit the receiving account, which is the office machinery account. We credit the giving account, which is the cash account. Now, let's look at this one. The proprietor invests in the company account by check, or makes a payment into the company account by check. Who is the proprietor? The proprietor is an owner, a shareholder, a member of the company. And so the proprietor's account is what account? The capital account. And that proprietor is the one who is making the payment by check into the company's account. And so once it's by check, it's going into what? The company's bank account. So what are the two accounts here? The capital account and the bank account. I hope that is clear. So which of the accounts is giving? The capital account. Which account is receiving? The bank account. So which one do we debit? The receiving account, which is what? The bank account. And which one do we credit? The giving account, of course, which is what? The capital account. I hope this one is clear. Good. Now let's look at this transaction. A loan is received from a financial institution. A loan is received from a financial institution. What are we talking about here? A loan, which is what? A liability. But when it comes in as what? Cash, which is received typically into the bank account. Because typically, no financial institution granting you a loan will give you the money over the counter. They will pay it into your bank account. And so here you are going to have two accounts, which is going to be a loan account and your bank account. I hope that is clear. So the loan account is the account that is giving that money, which will be received into your bank account. So which one is the receiving account? Your bank account. Which one is the giving account? The loan account. So which one do we debit? The receiving account, which is the bank account. And which one do we get to credit? The giving account, which is the loan account. I hope this one too is clear. Good. Now, the company repays the loan by check. The company repays the loan by check. So, what are the two accounts involved? Once again, there is the loan which is being repaid. So, the loan account comes in, and that payment is made by what? Check, which means the bank account. So, we are dealing with the loan account and the bank account. Which of them is giving now? The payment is being made out by check, which is from the bank account. So the bank account is giving. And which account is receiving? The loan account is receiving. So who gets to be debited? The receiving account, which is the loan account. And obviously, the bank account, which is the giving account, gets to be credited. Good. So you see, it is not a difficult exercise. The double entry system is a fairly straightforward process, so long as you are clear in your mind the rules surrounding it. So now that we understand how to determine the accounts involved and which accounts get to be debited and which one gets to be credited. So now let's practicalize it and actually record these transactions by double entry in the respective ledgers. All right, I hope we can try our hands on that. Good. So now we are going to go through a series of transactions and we are going to actually record them in the respective accounts or ledgers. We tend to call them the T accounts because their design is like that of the letter T, where on the left side you'd have debit transactions and on the right side you'd have credit transactions. And so typically that's how the T account gets to be rendered. There is the horizontal line and the vertical line. To the left of the horizontal line, we are going to have the caption debit, which is typically represented with DR, right? Debit. And then to the right side of it, you're going to have the credit, which we tend to represent with CR. And then at the center, on top of it, we'll write the name of the account. I hope that is clear. Good. And then for each transaction, we are going to write, if it is a debit, on the left side beneath the horizontal line, and if it's a credit, on the right side beneath the horizontal line. And so we are for each transaction going to indicate the date of the transaction, the description of the transaction, and the amount of the transaction. The three elements: date of transaction, right? The description, which is the kind of transaction that it is, or the corresponding account into which the transaction is going, and the amount, all on one side. If it's a debit, all on the side to the vertical line, that is to the left side, and then if it's a credit, all to the right side of the vertical line. I hope that is clear. So let's try our hands on a few examples. Good. So for the first transaction, on August 1, 2018, started in business with a capital contribution to the business paid into bank, the tune of 10,000 Ghana cedis. Started in business and made a capital contribution paid into bank to the tune of 10,000 Ghana cedis. So you see, this time around, we are adding the value of the transaction. So immediately, what are the two accounts that get to be impacted? there is a capital contribution, which is capital, which is paid into a bank account. So there is the bank account. So now we need to draw the ledgers for those two accounts. The capital account ledger, and we are going to also have the bank account ledger. So let's start with recording in the capital account ledger. So we draw our T table. We have our headings, debits and credits, and with our caption, capital. And then within the T table, on both sides, we need to indicate the date, the particulars, and the amount. And we do same on the right side as well. Now, the transaction was on August 1, 2018. And so for the particular section, this is where we are going to indicate the corresponding account into which this transaction is going. And what is the corresponding account? It is the bank account. So for our date, we are going to have August 1, 2018. For our particulars, we are going to have bank, and for the amount, we are going to have 10,000. The question is, which account are we debiting? Which one are we crediting? Giving us the capital account is giving, and the bank account is receiving. It is the bank account that will be debiting. So when we come to the capital account, we are doing what? Crediting, which means this transaction will be recorded on the right side, which is the credit side. So we put our date there, which is August 1, 2018, the particulars, which is bank, and then the amount, 10,000 Ghana cedis. I hope this is clear. Good. Now let's go on to the other account, which is the bank account. So we do same for the bank account. Our T table, debit on the left, credit on the right, and then we put the headings there. The heading, which is bank account, and then we have date, particulars, and amount on both sides. As we indicated earlier, the bank account is the receiving account, and so we are debiting the bank account. So we'll be recording the transaction on the debit side, which is the left side. And so the date is August 1, 2018. The particulars in the bank account will be what? Capital, because that's the corresponding account. And then the amount will be what? 10,000 Ghana cedis. So we have done our double entry, both in the capital account into which we posted the credit and into the bank account into which we posted the debit. I hope this is clear. Let's move on to the next transaction. Now, on August 2, 2018, bought office furniture worth 500 Ghana cedis. What are the two accounts involved? Office furniture and bank, because it was bought by check worth 500 Ghana cedis. So you see, we have office furniture account and bank account. Which of the accounts is giving? The giving account is the bank account, because we are paying from the bank account, and the receiving account is the office furniture account. So the receiving account that we are going to be debiting is the office furniture account. So now let's create the office furniture account, which is the T account. So we just do our T table again, putting the debit on top of the horizontal line, credit on top, that's to the right side, and in the middle, put the office furniture. And then beneath the horizontal line, let's put the particulars or the headings on both sides. Date, particulars, amount, date, particulars, amount. Now, the transaction. In the office furniture account, we are debiting it. So we'll be recording it on what side? The left side. So on the left side, we write the date, August 2. For the particulars, what is the corresponding account? It's the bank account. So the particulars will be bank, and the amount will be what? 500 Ghana cedis. I hope this is clear. Good. So now let's go and record the other leg of the transaction, which is going to be done in the what? Bank account. Fortunately, we've already opened a bank account ledger. So let's go into the bank account ledger. This time round, it is a credit because it's the bank account that's making the payment. And so now we are going to record the transaction on the right side of the bank account. And so we put in the date again, which is what? August 2, 2018. The particulars this time around will be the corresponding account, which is what? Office furniture, and the amount will be what? 500 Ghana cedis. As simple as that. Is it clear? Good. Now the third transaction. Now, on August 3, acquired office machinery worth 820 Ghana cedis on credit from A Company Limited. Acquired office machinery worth 820 Ghana cedis on credit from A Company Limited. What do you think these two accounts will be? Of course, there's office machinery, and the purchase was on what? Credit, which means there is a what? Creditor account. So what are the two accounts involved? Office machinery and creditor accounts. And that creditor is who? A Limited. So let's open those two accounts. Good. So we open first the office machinery account, and then we'll do same for the A Limited, which is a creditor account. But the question is, which account gets to be debited and which one gets to be credited? Which one is the giving account? It is the creditor who is giving the office machinery, and the office machinery account is receiving. And so which one do we debit? The receiving account. And so office machinery gets to be debited, and then the creditor account gets to be what? Credited. Good. So let's go ahead with our T account for office machinery. So we put together our T account, put the right headings, that's debit on the left, credit on the right, and then we put the title there as office machinery. Let's put in the respective headings below the horizontal line on both sides. And in this case, we are debiting it. So on the left side, that's where we'll be recording the transaction. So let's put a date there. August 3, 2018. What will be the particulars? The corresponding account. And what is that? A Limited. So A Limited will be the particulars, and the amount is what? 820 Ghana cedis. Good. Now let's have the other side. So we go into the A Limited account, which is a creditor account. So we have the T table there as well. We have the debit and credit to the top of the horizontal line, and in the middle we put A Limited as the heading. Let's have the headings on both sides below the line, and now we record our transaction this time around on the credit side, which is the right side. So the date is what? August 3, 2018, and the particulars will be what? The office machinery. Office machinery. And then the amount 820. Third transaction done. I hope this was clear. Good. Now let's look at the fourth one. So now let's look at the fourth transaction. The company received a loan from D Associates worth 18,000 Ghana cedis by check. received a loan from D Associates worth 18,000 cedis by check. What are the two accounts involved here? Of course, there's a loan account, which is what? From D Associates. So D Associates is a lender, which is a loan account. And what is the corresponding account? The amount was received by check. So it goes what? Into the bank account. So the two accounts involved is D Associates into bracket loan and bank account. These are the two accounts. Fortunately, we already have the bank account open. And so we have only the D Associates into bracket loan account to open. So let's open that account. So we have our T table, headings all taken care of. Now, of these two accounts, which one is the given account? Of course, it is the D Associates loan account, which is giving. And which account is receiving? It is the bank account that is receiving. So which one gets to be debited? The receiving account, of course, which is bank account, and the given account will be credited, which is D Associates, which is the loan account. So let's record the debit first. So the debit will be going into the bank account. So let's go straight into the bank account. We go into the bank account and would record it as a debit. So we go to the left side beneath the earlier transaction, which was a debit. And so the date here is August 4, 2018. The particulars will be what? The corresponding account, which is D Associates into bracket loan. And then the amount will be what? 18,000. Simple. Now let's go to D Associates, which is the loan account. Let's open that account with the respective headings. And now let's get in the transaction. This account is going to be credited. It's going to be credited. And so we'll be recording it on the right side. So the date, August 4, 2018, the particulars will be what? Bank, which is the corresponding account, and the amount 18,000. Transaction 4, done. Now transaction 5. On August 15, the company bought a delivery van worth 7,000 Ghana cedis by check. Bought a delivery van worth 7,000 Ghana cedis by check. What are the two accounts? Delivery van account. Delivery van account, which is a motor vehicle account. And it was paid by check, so the bank account. Delivery van account, bank account, the two. We already have our bank account open, so we need to open our delivery van account. So we would open that. And in this case, which one is giving, which one is receiving? The bank account is from what the payment is being made. And so that will be the given account. And the delivery van account is what is receiving. And so we'll be debiting that account. So let's open the delivery van account and do the debit. So the delivery van account is duly open. Because it is the debit, it's going to be recorded on the left side. So August 14, 2018, particulars is going to be bank, because the corresponding account, the amount is 7,000 Ghana cedis. Now let's go into the bank account and record the corresponding leg. So you go to the bank account, it is the credit. So we'll be recording it on the right side. So we'll put in the date, August 14, 2018. The particulars is going to be what? The corresponding account, which is delivery van. And the amount, 7,000 Ghana cedis. So now, on August 21, cash of 2,000 Ghana cedis was withdrawn from the bank to be kept as cash in the safe. What are the two accounts? There was a withdrawal from the bank account, so you have the bank account, of the amount of 2,000 to be kept as what? Cash in the safe. What are the two accounts? Bank account, cash account. Bank account giving, cash account receiving. Bank account, because it is giving, will be credited. Cash account, because it's receiving, will be debited. We already have bank accounts. So now, let's open the cash account. So we open the cash account. Cash account is the one receiving, and so we debit the cash account. And once we are debiting, we are recording on which side? The left side. So the date, August 21, what is the particulars within the cash account? Bank. What is the amount? 2,000 Ghana cedis. Done. Let's record the corresponding leg in the bank account. What is the date? August 21, 2018. What is the particulars? The corresponding account, which is what? Cash. And what's the amount? 2,000 Ghana cedis. Done. Now, on August 25, the company bought stationery to the tune of 200 Ghana cedis by cash. Bought stationery worth 200 Ghana cedis by cash. What are the two accounts? Stationery and cash. Stationery and cash. So let's open the stationery account because we already have the cash account open. So we record the stationery account. Of these two, which one is giving, which one is receiving? The cash account is giving because the payment is being made from cash. And which account is receiving? The stationery account. So which one gets to be debited? The receiving account, which is stationery account, and the cash account will get to be credited. So let's record in the stationery account. We open it, and for the date, August 25. What is the particulars? This is the corresponding account, which is what? Cash. And the amount, 200 Ghana cedis on the left side, which is the debit side. And then we go to the cash account. What is the date? August 25. Particulars. That will be what? The corresponding account, which is what? Office stationery. And the amount is 200 Ghana cedis. Done. Now let's look at the last but one transaction. On August 28, we received a loan from Grace Advocates by cash or in cash. On August 28, we received a loan from Grace Advocates in cash to the tune of 7,500 Ghana cedis. 7,500 Ghana cedis. So what are the two accounts involved? There is another loan account here, but this time around is from Grace Advocates. So that is Grace Advocates into brackets loan. That is the account. And what? It was received in what? Cash. So this time around it's a cash account. So we have the Grace Advocates loan account and the cash account. Which account is given? Of course, the loan account is giving and the cash account is receiving. So which one are we debiting? The cash account. It is receiving. And who are we crediting? Grace Advocates loan account. We already have our cash account opened. So let's go and record the debit in there on the left side. So in there, the date is August 28. The particulars will be what? Grace Advocates into bracket loan, and the amount 7,500. Done. Now let's open the account for Grace Advocates. So we open an account for Grace Advocates. So Grace Advocates is the one giving, so credit. So we'll be recording it on the right side. The right side. Good. So we record it in there on the right side. The date, August 28. The particulars will be what? The corresponding account, which is cash. And the amount, 7,500. That's done. Now our final transaction. On August 30, cash of 5,000 Ghana cedis was paid into the bank. Cash worth 5,000 Ghana cedis paid into the bank. What are the two accounts involved here? The cash account and the bank account. Which one is giving? The cash account is giving. Which one is receiving? The bank account is receiving. And so who are we debiting? The receiving account, which is the bank account. And which one are we crediting? The given account, which is the cash account. We already have both accounts opened. So let's go to the accounts we are debiting first. And that is the bank account. So to the left side of the bank account, let us record the transaction. August 30 is the date. Particulars will be what? The corresponding account, which is cash. And the amount is what? 5,000 Ghana cedis. Let's go to the cash account and record the credit. So the credit on the right side, the date August 30, particulars bank, and the amount is 5,000 Ghana cedis. We are done. But now, we are done recording all the transactions, but we need to close the respective books. How do we do this? So we are going to look for the various accounts and going to sum the credits and the debits. The side where there is less, the side where there is less, we are going to find the difference between that side and the other side. And the difference, we will record it on that side where there is less and give it the description balance carried forward. Balance carried forward. Why is it balance carried forward? It is the difference between the two sides which, when we put to the shorter side or the side which is less, would give equality to both sides. So that is the balancing figure. And that difference is the amount that is being moved into the next reporting period. So you realize that all our transactions were for the month of August 2018. And so now August 2018 has ended, and the balance to be carried down or carried forward is going to be the difference between the credit side and the debit side that is to be moved into the next period. So we are going to take the various accounts one after the other and get to find their balances, and then we get to carry it forward. I hope that is clear. Good. So now, let's start with the capital account. So the capital account has 0 on the debit side, but has how much? 10,000 on the credit side. What that means is we need to come and record balance carried forward of 10,000 on the debit side for the date 31st August, because it's the final day of the month. So the date will be 31st August, and the particulars will be balance carried forward, and the amount is going to be what? 10,000 Ghana cedis. So once we do the sum, we underline both sides. What we are saying in essence is that we have closed that particular period for that account. So we double underline both sides. So both sides have 10,000 double underlined. Account closed for the month of August 2018. But once we carried it forward from 2018 August, then it means for the next reporting period or accounting period, which will be September of 2018, 1st September, that amount will now be brought forward. You see, when we were in the previous month, we said we were carrying it forward. And now that we've come into the new month, we are saying we have brought it forward. So we'll come and record the brought forward on the other side. In this case, it is on the credit side. So on the credit side, we'll have our date, 1st September 2018, and the particulars will be what? Balance brought forward, and the amount is going to be what? 10,000 Ghana cedis. I hope this is clear. Good. So let's move to the next account, which is the bank account. So for the bank account, the total debit
33,000 Ghana cedis.
And the total credit is 9,500 Ghana cedis. What that means is there is a deficit of
23,500
on the credit side. So to close the books, we are going to have a balance carried forward dated 31st August of
23,500
on the credit side. On the credit side. Once we are done with that, we underline both sides, and the total for both sides is going to be
33,000 Ghana cedis.
That's for both sides. Good. And then we double underline for both sides. After having done that, that balance carried forward of 31,000 on the credit side, we will bring it to the new period, which will be 1st September 2018, which is going to be what? Balance brought forward. That's going to be the particulars now, and the amount is going to be what?
23,500.
We are done. Now, the next account, office furniture. For office furniture, you'd realize that there is only one side with a transaction, which is the debit side, which is 500 Ghana cedis. What that means is there's a deficit of 500 Ghana cedis on the credit side. So that is going to be for the 31st August, balance carried forward, we're going to have 500 Ghana cedis. We double, and in fact, we underline both sides and then have the total for both sides, which is going to be what? 500 Ghana cedis, 500 Ghana cedis. We double underline. And then we'll have the balance brought forward for the new period, which is going to be 1st September. The particulars is going to be balance brought forward on which side? The debit side. And the amount is what? 500 Ghana cedis. Done with that as well. Now let's look at office machinery. Office machinery. Office machinery also has 820 Ghana cedis on the debit side, and on the credit side, there is zero. What that means is there's a deficit of 820 Ghana cedis on the credit side. So we would have for 31st August on the credit side, balance carried forward of 820 Ghana cedis. We underline both sides, and the total for both sides will be what? 820 Ghana cedis. We double underline both sides, and then we bring the balance brought forward into the new period, which is 1st September, on what? The debit side, because we are doing the reverse, all right? On the debit side, and the amount is what? 820 Ghana cedis. Done. Now, let's look at D Associates, which is the loan account. In D Associates, which is the loan account, you'd realize we have 18,000 Ghana cedis on the credit side and zero on the debit side. So there's a deficit of what? 18,000 cedis on the debit side. And so we are going to record that for 31st August, balance carried forward of 18,000 on the debit side. Then we underline both sides, and we're going to have the total of what? 18,000 Ghana cedis for both sides. We double underline, and then we will have what we carried forward into the new period, and it's going to be balance brought forward. That's on 1st September on the credit side to the tune of what? 18,000 Ghana cedis. Done. And now, when you do the same process for delivery van, what results are you going to get? Try that and let's see what results you're going to get. So if you did it right for delivery van, you'd realize that the total debit is 7,000 Ghana cedis and the credit is 0. So the balance carried forward will go onto the credit side of what? 7,000 Ghana cedis. We underline both sides, and we're going to have a total of 7,000 cedis for both sides. We double underline, and the balance brought forward is going to be on the debit side, which is 7,000 Ghana cedis. I hope you got that right. Good. Now, try your hands on the cash account. The cash account. If you did it right, you'd realize that you're going to have the total debits being 9,500 and the total credits being 5,200, which means there's a deficit of 4,300 on the credit side. And that means then that we would have to put the balance carried forward on the side of the deficit, which is the credit side, which is dated 31st August. So 31st August is going to have balance carried forward of 4,300 Ghana cedis on the credit side. So we double underline, and we are going to have 9,500 for both sides. Good. Then we're going to have the balance brought forward to where? The debit side for the new period, 1st September. Great. Now let's look at the two final accounts. The stationery account. The stationery account. So for the stationery account, you'd realize that on the debit side, there's total stationery of 200 Ghana cedis with 0 on the credit side. So we're going to have balance carried forward of 200 on the credit side. We underline both sides, and the total is going to be 200 for both sides, and we double underline them. Then we are going to have the balance brought forward on 1st September being 200 cedis on which side? The debit side. Great. Now the very final account. So for the very final account, that will be Grace Advocates, which is a loan account. Grace Advocates, which is a loan account. So on that account, you would realize that there is 7,500 on the credit side, and there is 0 on the debit side. What that means, the deficit is on the debit side. So we'll put it there for 31st August, balance carried forward of 7,500 Ghana cedis. We underline both sides, and we're going to have 7,500 Ghana cedis for both as total. We double underline, and our balance brought forward for 1st September on the credit side is going to be what? 7,500 Ghana cedis. Now, we are done with closing all of these accounts. What we have been able to successfully do so far on this episode is to understand the history of the double entry system, understand the maxims guiding the implementation of it, also understand how to implement those maxims, knowing which account to debit, which account to credit. And we have gone further to actually practicalize the recording of these ones in the respective ledgers. This has been episode 9 of Making Account Legal Accounting Made Easy with Benji. I hope you had a good time learning. My name is Benjamin Ofeado, and let's meet on the next one.